Have you ever been blindsided or hit by something unexpected? How did it make you feel? Confused? Upset? Angry? That's often how companies feel when they discover that assets on their balance sheet are impaired. But what is impairment? Impairment exists when an asset's carrying amount exceeds its recoverable amount. Impairment is not something that you can plan for, and nobody wants to experience recording an impairment charge. But the good news is that IAS 36 provides accounting guidance. The objective of IAS 36 is to prescribe procedures that an entity will apply to ensure that its assets are carried at no more than their recoverable amount. The standard also specifies when an entity should reverse an impairment loss. So, back to the impairment formula. Impairment exists when the carrying amount of an asset exceeds its recoverable amount. But what do these terms mean? The carrying amount is the amount at which an asset is recognized after deducting any accumulated amortization and accumulated impairment losses. The recoverable amount is the higher of fair value less costs of disposal and value in use. Fair value less cost of disposal represents the value from selling the asset. Fair value is defined by IFRS 13 fair value measurements, and costs of disposal are the incremental costs attributable to the disposal of an asset. You will learn more about this amount in this course and in Part 2. Value in use is the present value of the future cash flows expected to be derived from an asset. In summary, it is the value from using the asset. You will learn more about this amount in this course and Part 2. In addition to providing guidance on the impairment test itself and the calculation of the amounts just discussed, IAS 36 also includes guidance on timing, level, and sequencing of impairment testing, among other items. This course will cover the scope of IAS 36 as well as the timing, level, and sequencing of impairment testing, along with an overview of the impairment test itself. The Impairment of Assets Part 2 course will go into much more detail on the impairment test, including calculation of the recoverable amount, value in use, fair value less cost of disposal, and ultimately the impairment amount.